Hi, this is Doug English with Act Advisors with your January 2024 update. 2023 was a great year, but perhaps the most important part is the time that you spent with family over the holidays. I hope you enjoyed your time together and were able to set out some plans for 2024. Act Advisors would very much like to support those plans. Let us know when you're planning on taking some money out to pay for those trips that I hope you're going on, or if you have funds coming in or going out, let us know because we carefully plan the assets that you own based on when your withdrawals are coming. Now, 2023 and December were really great times for several reasons I talk about. So in the first place, again in December, we saw the S&P and the bond market both move up something in the area of 4%. Most of you will see your accounts moving up something in the area of 5%. And one of the rarest combinations in your taxable accounts. We're always looking for tax loss harvesting opportunities because we want you to achieve the greatest return possible and ideally not pay taxes on it. So in October, we were able to do a tax loss harvesting trade, moving between the tax-free municipal bonds that you see in your taxable accounts. That, for many of you, has eliminated the capital gains that you were going to owe last year on the profits in your account. So for many of you, you have the ultimate outcome in your taxable account where the account balance has grown substantially, yet you'll get to write a tax deduction off on your return from that capital loss. So love it when that happens. It is rare and it is not going to continue. Most of you now have large capital gains in your taxable accounts that we're going to have to balance things around going forward. So for the year, S&P made about 26%, tremendous return, dominated by the tech stocks at the very top of the holdings in that index. The bond market about 5.5% for the year. So we had a lot of variance, as you might imagine. There's a 20% spread between the stock and the bond markets for the year. So there's a lot of spread between your more conservative folks and the more aggressive folks. We captured the returns of those two indexes that we talked about. So our most aggressive folks made right about 26% for the year. Then the 80% stock folks made about 19%. The balanced folks, which is many of you have balanced accounts, 60% stock, were about 15% for the year. And then our most conservative folks were still in the double digits, which is impressive when you are 80% bonds at about 11% gain for the year. So overall, everybody, very profitable year, depending on your level of risk. Now, we have stock rotation strategies and bond rotation strategies. Those exist because we're trying to react to what's going on with momentum in the markets. So each month we measure what is working, look at all the various categories of stocks and bonds that we have back tested to have some predictive appeal. And in the bond rotation, we rank them all and look at what's doing the best. Well, for December, two of the positions we were in remain unchanged coming into January. The only change is the preferred securities were sold and moved into long-term treasuries. For the stock rotation, we have had a technology-focused ETF, the QQQ, for several months, and that's continuing into January. It's very close to triggering a trade in the tech stocks, but not yet. This, of course, is an election year, 2024, so that is pretty historically good as far as returns go. The Santa Claus rally is the first couple of days of this year. It's looking all right so far because the last few days of January and the first 2 days of the last few days of December and the first couple of days of January are the classic Santa Claus rally. So what we want to see is for that to do well, to just have a positive result, have the first 5 days of January have a positive result, and have the month of January have a positive result. And that is a predictor of a very positive year. Now, that's what occurred in 2023, so we'll be paying attention to how that does this year. But of course, we're always reacting and making changes in your portfolio based on the information we get from our research department and, very importantly, based on the momentum in the markets. As always, we are here to serve you. We want to hear your questions. We want to help you with your tax strategies. We want to help to reduce your costs of insurance. We want to help to locate your assets in the most efficient place possible. So call us, let us help you, and thank you very much for your business.